SMCI is up around 27% just on the day. Over the last month, it's up around 51%. And if you're someone who bought on the dip just a couple of weeks ago when it was trading at $17, you would be up right now 150%. So what's going on with this company? Is it one we should consider in our portfolio? As we can see, it is trading towards the 52-week low. We get a sell rating from Quant, and both Seeking Alpha and Wall Street give this a hold, with the forward P looking very cheap, below 12, and we will compare it to the sector median as well. In terms of just a few weeks ago, this company was down 33% on the news that Ernst & Young submitted their resignation letter. They were the current auditors, saying they were unwilling to be associated with management and their financial statements. Remember, this was off the back of Hindenburg, who were a massive short seller in this company, where they talked about a lot of issues with the company's internal controls, the board independence, and some of their numbers. We also noticed it was reported that they were under federal investigation from the Department of Justice. Now, just a few weeks later from that, this very volatile company popped up around 41%, and that was on the news that they had appointed BDO as their independent auditor, and that there would be no issues with their approval, as there was some concern about delisting from the Nasdaq, and the market did like that news, hence why the shares were up. We can also see last month that Supermicro's board of directors said that they had found no evidence of fraud or misconduct from management after the auditors resigned, and we can in fact notice it was a 3-month investigation. And we can see the news today, very volatile stock, as we said, lots of double-digit movements on a day-to-day, week-by-week basis, that the special committee finds no evidence of misconduct. In fact, when we take a look, we can see in fact the evidence that has been reviewed by them did not raise any substantial concerns about the integrity of their senior management or in fact their audit committee, ensuring that the company's financial statements are materially accurate, and that is ultimately what investors do want to hear. Now, there was an added piece of information within this news today that they are searching for a new CFO, a chief financial officer, and also very interesting to note this comment here, but they said the committee ruled that the conclusions that have been reached by Ernst & Young in the resignation were not supported by the facts. Now, very interesting, Ernst & Young are a very big firm, in fact one of the top 4 auditors. Again, this may be something to think about, and we can also see here that the firm's audit committee exhibited appropriate independence and generally provided proper oversight. And for those that are interested, the special committee consisted of a member of Supermicro's board, counsel from Cooley LLP, and a team from forensic accounting firm Secretariat Advisors. So lots of information. Clearly the market does like this a lot. It is up around 27%. As we said, you would be up around 150% if you had bought at that drop. Now, when we take a look to see the insider ownership of this company, it sits at just under 18%, where we have noted around 49 million of sales during the last 12 months, although we can clearly see in the more recent quarter of Q4, no movement in terms of insider buys and sells, and the same to be said for Q3. Now, you can take a look here to see when the more recent trades were, and you would in fact have to go all the way back to June, where we saw a direct to sell for around $241,000. We do believe this to be outdated for an investment thesis, but also insider selling not something we conclude on this channel as having any indications on the company itself, as ultimately they sell for many reasons, personal and financial. In terms of institutional ownership, well, that's around 84%, 261 million worth of sales over the last year. During the same time frame, we pretty much see nearly double the amount of buys, and also the same to be said in the more recent quarter. So institutions, even with the issues that we have seen over the last few months, have still been buying more shares of Supermicro than they have been selling. We also note this company still expects some very large growth over the next 4 quarters. However, having looked back, they did miss on that more recent earnings by around 19 cents. When you do look at the last 4 quarters though, they have a 75% track record, 3 out of 4 beats, but also looking towards June 2026, their next full year accounts, that forward PE will come down even further to 8.71. Now, that's interesting to consider because right now on the valuation grade, they do get an A+. When you look at it in terms of SMCI, 11.56 a PE on a non-GAAP basis. The sector median 25.37, meaning if you are buying this company right now in comparison to the sector overall, you are getting a 55% discount. Whether or not you believe this company does deserve a discount is something to consider, but we also notice pretty much whatever metric you do look at, the conclusion still remains. Then when we look at the growth, still very positive. You've got an A+ on valuation, an A on growth. Revenue year on year, triple digits. Maybe after the news today, it does give you faith that the numbers are accurate and reflective. 4.34% in terms of the sector, so a lot better. Moving forward, still very strong at double digits, with the sector median around 5.67. And one of our other key indicators here of growth is the EPS over the next 3 to 5 years, 38%, whilst the sector is a lot lower at 15.4. Now, the one thing where they don't grade as well is the profitability, where they get a D. As we can see, their margin of 14% is significantly lower than the sector of 51%, but when we do take a look at that bottom line margin, 8.10%, it is better than the sector of just under 4%. And the other thing that probably doesn't help with their profitability is their cash from operations, burning cash negative 2.5 billion, whereas the sector over the trailing 12 month is positive, even if it is small, around 97 million. Now, before we jump into our own valuation, a few other key metrics to highlight from this company. Their free cash flow has been very inconsistent over the longer term, although we do note over the next 12 months, this is anticipated to be positive, around 76 cents per share. Their sales growth over the longer term, nearly double digit every single year. 2024 looking very good at the triple digit 110% rate, and that is also reflected on their bottom line in a numerical format. In terms of shares outstanding, they have marginally diluted your position over the longer term. In fact, they have increased shares outstanding by around 20% from 2015, nearly 10 years ago. And the ROIC, whilst it is one of our favorite metrics at 10% or more, which we do use to give us faith that management are able to effectively allocate their capital, we can see over the longer term, Supermicro does hit that with a fairly respectable 17% in 2024. Now, the one thing we would like to see from companies and their operating margins is at least be around the 16% minimum, and on top of that, show operating efficiencies, which we get when this margin increases over the longer term. However, this isn't something we do note from SMCI at the moment, maybe something to keep an eye on, and the free cash flow margin reinforcing the inconsistency that we did see above from the numerical format. Net debt to EBITDA, another one of our favorite metrics. EBITDA referring to the earnings before interest, tax, depreciation, amortization. We want to see below 1.5 for this industry, which we do get. And remember, this correlates to the balance sheet strength, with these numbers indicating the number of years it would take the company to pay off all of their debt net of cash on hand. 0.34 over the last 12 months. 0.21 over the next 12. Again, if you do rely on those numbers, you do believe they're accurate and represent a fair overview of the company, then it does look to be very healthy in terms of the balance sheet strength. Now, final thing before we jump into the valuation, just to let you know, we have today released our weekly article, free, and you can click below to sign up and read straight away. We uncover 2 cheap stocks that have been under the radar. And when you do sign up, we do send one every single Monday morning to your inbox, where we talk about severely undervalued stocks that deserve your attention, as well as what's gone in the market over the last few days. You can grab a copy of 28 undervalued dividend stocks, lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that, another newly released spreadsheet that runs through 29 undervalued dividend stocks with the most upside right now in the S&P 500 according to Wall Street. So click below, you can sign up and start reading straight away. Now we're going to jump into our valuation, and today the intrinsic value gets to $44. Remember, as always, if you do enjoy the episode, value is provided. Smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now we got to $44 from the DCF model, where we have the free cash flow year on year. Average growth, very inconsistent, negative to positive, but moving forwards, we've gone for a 12% rate, which is the medium today, 10, 12, 14. Based on the discount rate, we get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as we can see here, based on this rate, we get $44, and that indicates around 4% upside. Remember, these numbers are subjective. You can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for Supermicro computers or any others, but full transparency, at the 12% rate, an intrinsic value of $39, indicating downside of 8%, and at the 14% for those that are more optimistic, around $50, upside of 18%. Now we'll take the 12% through to the final slide, but essentially what we're saying right now, this company, if you do believe the numbers are true and factual, is trading around its fair price. But what we always like to do on this channel is add a margin of safety where we start at 10%, execute on that if it meets our 3 golden criteria: wide moat, strong financial metrics, and good forward-looking data. If you believe that today, well, it is a buy at around $40 with a 10% MOS, and we typically keep going till it's near the current trading price. But as this company is trading around its fair value, you can see the different rates based on the different margin of safeties. So right now, today's day, pretty much trading around its fair price. Wall Street believe there's a very limited upside, in fact 5% downside over the next year. Their price target is $40, but as always, give us your thoughts below. If you enjoyed today's episode, smash that like button, hit that subscribe and bell button, and don't forget to sign up to the free weekly newsletter and come and join us in a Patreon where we do talk about our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.